Good morning, everybody. Hey, welcome to Monday, March 9th, the first day after daylight savings time. So hopefully you're not dragging too bad this morning. But the markets are dragging. They're dragging significantly. Oil seems to be a big precursor to what's happening in the marketplace today. And Dave and I'm sure we'll talk about that. That's all there is to talk about this morning is what's happening in the marketplace. Look, folks, if you're close to retirement, man, this has got to be causing some pain and anxiety right now. Give us a call. Let us help walk you through where you are to make sure that you're going to be okay in retirement. Give us a call at 863-382-0037 to make sure that you don't have too much risk in your portfolio given where we are today. I know it's going to be a very volatile day today, but now's the time to get a second opinion on your current portfolio. Hey, hang tight. Looking forward to this morning's show to get started with Dave.
5.7 Highlands Light FM. That's Human League there. I'm Morning Dave. We're at 8:39 here, 21 before 9. Time to check in on your money like we do every weekday morning about this time. And gosh darn, it looks like the headline story of the day isn't going to be the coronavirus on the financial world for the moment. It's our number 2 story because right now we got an oil crisis. Let's go downtown to the offices of Statler Financial Services. Phillip Statler standing by. Well, at the very least, we're not talking epidemiology to start the morning out, Phillip. I can't come up with another way of trying to spin this thing to a positive thing, though, can you?
No, I almost wish we were, though, because it seems like oil is the topic of the day, and Russia and Saudi Arabia are in this cost-cutting measure that cannot come to an agreement over production. And so we saw oil plummet 30% yesterday, and so that seems to be what's fueling our markets today, not positively but negatively.
Absolutely. $31.54 a barrel is what I'm seeing, and it looks like it's trending downward. Yeah, it just ticked down to 31.50. It's going straight down for all intents and purposes. Backstory, in case anybody hadn't heard, Saudi Arabia wanted to cut back production and raise the price of oil to compensate for the fact that the world economy is slowing down because of the coronavirus scare. The Russians essentially said, pound sand, we're going to keep putting out oil like it's going out of style. John McCain put it pretty well. Russia is basically a gas station with an army, and they don't want to see their economy tank off of that. Saudis are saying, well, it's cheaper for us to pump oil out of the ground than any place else. You want to pump more oil? We'll pump more oil, and we'll tank your economy that way. And we've got a good old-fashioned petroleum war going on between Saudi Arabia and Russia. Now, that's good news for us, except we got a few pretty big companies in this country that deal in petroleum, and their stock prices are just falling like rocks this morning, aren't they?
Yeah, they really are. I mean, some of the big names like ExxonMobil and Chevron are getting beat up this morning. Both of those are down a little over 16% this morning. Actually,
Absolutely.
they'll open it way below their 52-week low, but probably by about 10 to 15% below their 52-week low.
And in contrast to those big household names, some of the smaller names in the industry are even doing worse. And these aren't small names, they just aren't the ones that we recognize at the top of the thing. Everybody knows the name Marathon. They're a pumper as well as a gas station chain. They're down by like 34.5% at the moment. Occidental Petroleum, which isn't a household name but a big name in the industry, Occidental is down by 32%. And it's a bloodbath. Every single stock on my big loser list this morning is a petroleum stock. And we got to keep in mind that when the price goes down like this, there is no reason to pump over in the West Texas oil fields because it costs them about $40 a barrel to extract it. So we're looking at an unemployment kick over in the Dakotas and in the West Texas oil field patch, and that has a ripple effect through that entire part of the country.
Yeah, it does. You're right. That's the part that gets us here in the United States is that our oil industry can't handle that low price either, and so we have to our oil fields will start to shut down and cap off until the oil price goes back up. So even though you and I and folks out there will enjoy a lower price at the gas station, and other industries like transportation will also enjoy that benefit. The other side of that coin is that there'll be unemployment coming from those oil fields now in the oil industry, um, which in a full employment situation is not, I won't say necessarily a bad thing, but it is to those folks in those fields.
It would be manageable, and it would be something that we could shrug our shoulders, kind of like we did the last time the price of oil tanked, and we had some layoffs in the oil patch, lasted a few weeks, and then they fired back up again. But now you add on the fact that we're already getting kind of tamped down by the coronavirus scare, and really, we needed this like we needed a bad case of the flu.
Yeah, we already have a bad case of the flu, right? So we just need to make sure that even though we may enjoy lower gas prices, we need to remember that it does affect the overall global economy drastically.
Absolutely. I'm looking at my winners and losers list this morning. I mentioned all of my big losers were all petroleum stocks. To give you the idea as to what the concerns on the economy are, I'm only showing two winners on my short list this morning off the S&P 500. They happen to be Quest Diagnostics and LabCorp. Gosh, the people that are probably going to get fat off all the coronavirus tests now that the government announced over the weekend that they've got a couple million tests ready to ship out. That means the lab companies are going to be doing just fine. The rest of the country, well, not so hot at the moment.
Yeah, yeah, well, that's true. I mean, and then we've got the travel side of this thing, right, Dave? We've got, the cruise lines, because the government's come back out and said, look, we don't think you should be cruising. I mean, and typically, not to the airlines, not to the other industries, not the train industry, but specifically to the cruise industry, saying, look, U.S. citizens, you should not be cruising right now because of this coronavirus.
Yeah, as if the publicity of having two ships, one off the West Coast and one off the East Coast, both getting stranded by coronavirus infections. Now we got the government over the weekend with the CDC heads saying, I wouldn't take a cruise. It's not very often the government singles out your line of work and says, don't use that company. That's not good for the cruise business at all, is it?
No, it's really not, and it's affecting them pretty much across the board. We've got them Carnival down 11%, all the way to a Norwegian Cruise Line down 12.3. Well, now the Royal Caribbean just went up to almost 14. So everything is heading down when it comes to that sector of the industry.
And it's been a perfect storm all weekend. If you could pick an industrial sector, whether you're talking about petroleum, travel, anything, it's just been a horse poop weekend for just about every line of work as far as publicly traded stock is concerned, hasn't it?
Yeah, it really has. Now, the one thing we haven't really said how far we're falling. We're falling significantly. Let me just tell you, far enough that the circuit breakers are clicking off. So we're going to see probably the trading halted pretty shortly after the market opens, Dave.
Yeah, they've got circuit breakers at 5% drops, 10% drops, and heaven forbid we've got anything farther than that. If it gets past 15%, I think they just shut down trading for the rest of the day, don't they?
I'm not sure what those circuit breakers are. I just know they're there to help protect the markets so that people can get some sanity around themselves before they continue to trade out. So the other thing that's really happening today, Dave, is oil, not oil, U.S. Treasuries. Uh,
Mm-hmm.
Down below 0.5%. The 10-year Treasury is down to 0.45 right now.
Holy crud. Yeah, I hadn't looked at that. I just scanned down that far. And the 30-year is down to 0.91%. I don't think we've seen interest rates like that since the Great Depression, not recession, depression. That's utterly amazing.
Yeah, it really is. Now, I suspect that we will see some movement from the Fed here to kind of shore this thing up. I mean, we had a 0.5% decline last week. Not sure. I've seen some people calling for 0.75%. And so we'll have to see what happens, but we're getting pretty close to zero.
Yeah, understood. Now, on the other side of that fence, there's two sides to every coin. These incredibly low Treasury note numbers also make financing the federal debt considerably more affordable for the federal government. So, every coin has two sides. And this does take some of the pressure off the federal government as far as servicing the federal debt is concerned. So you always need to throw things out on both sides of the fence. It's not a 100% bad thing to see interest rates running this low.
No, not from the deficit standpoint. Definitely not. I'm thinking, maybe the Treasury needs to be issuing a whole bunch, right? More than what they need, so that they can pay off the other ones when they come due.
Well, that would be wise. That would be wise decision. They've always say we talk about wanting 2% inflation, because that makes basically borrowing money for the federal government a 2% discount when you do it that way. There are extremes on every front, and we may be hitting those extremes as far as interest rates are concerned right now. But short term, it's not a bad time for the federal government to be borrowing some money.
No, definitely not. And unfortunately, they can't pay off. I don't think they can pay off those 30-year bonds they already have early. So they just need to stock up the warehouse, so when they do come due, and the 10s and the 20 years come due, they can go ahead and pay those off.
Absolutely. So rolling it into a ball, we're setting the table. Didn't even talk about Friday, because Friday sounds like small potatoes compared to what we're looking at this morning. Dow was off by 256 points on Friday. That was just under a full percentage point on Friday alone. NASDAQ down by 163. That was almost 2%. Standard & Poor's was down 1.75%, down almost 52 points on Friday. And that looks like good times compared to what we're looking at this morning, 45 minutes early, doesn't it?
It definitely does, Dave. We are looking at a very, very deep, deep red in the marketplace today. So we've got the Dow down 4.9%. We've got and so dollar-wise, what does that mean? That's $1,256 to the negative. We got the S&P 500 down 145, NASDAQ down 410, everything about 4.8 to 4.9% declines today. The VIX is up 45% today, obviously because of all the volatility we're seeing in the stock market. We've got gold and silver split today. Silver is down almost 2.5%. Gold's up about 0.4%. And crude oil has been down as much as 30% this morning, now down 23% to $31.77 a barrel.
Yep, mine just ticked to $31.49. It's moved. I have not seen my tickers move this fast on any commodity in eons now. 30, 50, 49. I mean, talk about a volatile market, isn't it?
Yeah, it really is. It really is.
Absolutely. Overseas markets, Asia pretty much followed our suit. Japan is down over 5% this morning at the close. Hong Kong down by 4.5%, and Europe is taking a cue from us. Their markets are down by over 7% this morning. All of this off of cheap oil, which really could be costing us down the line, right?
Yeah, costing us big time right now, it looks like.
Absolutely. Talking about two sides to every coin, this has an impact on a retirement account as well, and that's your specialty, Phillip. How do I hedge my bets and get a hold of you in order to watch this with a little bit more askance eye than as if my neck was on the line for it?
Dave, we've been talking about now for a couple of weeks how important it is if you're in that danger zone 10 years prior to retirement. Folks, you need to pick up that phone and give us a call today at 863-382-0037 for our financial x-ray to look and see how much risk you really have in your current portfolio. Join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on your sister station, News Talk 730 a.m.
And back here again tomorrow morning with, I sincerely hope, better news for our money than we've got this morning, right?
I'm hoping so. Maybe this thing will bounce. But one of the guys I was listening to, the 52-week low on the S&P 500 is like 27.22. There's kind of this line in the sand. I think he said 27.30 or 27.35. But his opinion was it's going to break through that, and that won't be good either.
And the resistance levels are always countable when you start looking at that, and I hope that is a legitimate resistance level. We'll find out as the day progresses and be back here tomorrow morning. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that.
Hey, as we head into this day, if you are in that retirement danger zone, don't waste any more time. Pick up that phone, give us a call, 382-0037. Let us help you determine if you have too much risk in your portfolio. 863-382 0037. Hey, tune in tomorrow. I'm looking forward to seeing you then. Bye.